Knowledge is a process of piling up facts. Wisdom lies in their simplification. Martin S. Fischer. And I love that quote by Martin Fischer. Wisdom lies in their simplification. And folks, does it get any simpler than our chart? We use primarily the price percent oscillator, which is a percentage oscillator, percentage indicator of the MACD. We also use the derivative oscillator. Those are those green and red rectangles you see at the bottom of our chart. That is a triple smooth RSI, relative strength index, with a little magic put in by the MACD. It helps us see overbought, oversold conditions. So again, we do those for specific reasons. They're all covered very well in our book that you can see a link to in the show notes and buy so you understand this better. Don't forget, Patreon members, we have our live once a month question and answer session. I'm still taking your questions and the stocks you're interested in us looking at that you are currently practice trading. Please go ahead and email us cw@chartingwealth.com. That's going to be this Wednesday at 12:30 Eastern Standard Time. The number and the call-in information is in the email we sent you on Sunday evening. Hope you will join us, all Patreon members. You're not a Patreon member, want to know all the great benefits, the special short chart training, long chart training, the Bitcoin training, and all the other special stuff we do. Finding great entry points is another wonderful training video we have for our Patreon members. Check it out in your show notes. Go to our Patreon page, sign up at any of the 3 levels, and you will participate every month with us in our question and answer call-in. Now, let's get to these charts. Got a great training for you today in your show notes if you're a subscriber for free at chartingwealth.com. It is on an easy tracking method for your practice trades using TC2000 and freestockcharts.com. This is the trading platform that we use, the charting platform. So let's jump into this charting platform and see what we see. S&P 500 and the NASDAQ 100 down for the day. Bonds are up. Gold is down just a little bit. But how's our candle starting the week off? Well, we have a green up candle. We see that the high during the day, 315.18. The high last week, 315.31. So we're not reaching a high that first day of the latest 5-day candle. We do see the price percent oscillator flattening quite a bit so far this week. Derivative oscillator losing energy for the first time. This is just the first day of this week, but for the first time in 8 weeks. So again, some weakening we're seeing from the outset. And again, we look back 2 weeks also, and we see the high, 315.48. So again, haven't hit either of the 2 weeks highs. Didn't hit them this Monday, the 2 prior weeks. So again, seeing some weakening on that weekly chart. That doesn't mean the market's rolling over, crashing yet, but we are seeing some weakening. Remember, we had that 2-day crossover occur on Thursday. So this latest candle represents Friday and Monday. It is a green up candle. And again, that is a green up candle. It is above now the weekly trend line, but we see the price percent oscillator still down, derivative oscillator gaining downward momentum. That's from all that down movement the prior 4 days, even with the 2 days of overall up movement as far as the Heikin Ashi candlestick goes. You don't know about Heikin Ashi candlesticks? Take our training. You can find it at YouTube. We post it occasionally on Heikin Ashi candlesticks. I think it's the most popular one in the world. You will find there 40,000 people have taken it. Available for free. Go to chartingwealth.com. Heikin Ashi candlesticks. Also at YouTube. But what you see is the price percent oscillator is heading down. Now again, remember the overall trend is still up. The 2-day still confirmed down. If we see a rotation over and a close over the next 2 days, well, at the end of the next 2 days, that would be on Wednesday, of that 2-day crossing back over going up, might give you an opportunity to jump into an up trade. Wouldn't that be beautiful? We'll see. May not happen. If it does, we'll let you know. What do we see? And again, for that practice trade, potentially going up. Don't know if that's going to happen. We look at what happened over the course of the day. We see we had down movement throughout the course of the day. Price percent oscillator on the 4-hour chart is flat. Derivative oscillator still gaining some upward momentum. That's primarily from the prior day on Friday. A big bump up, and we'll see how this continues to move throughout the week. So again, keep in mind, 2-day is confirmed down, weekly is confirmed up. We don't have a trade on the S&P 500 right now. That 2-day chart has to rotate over, going up for us to jump into an up practice trade. Going to the Qs, it is also flat on the price percent oscillator. Things are on the derivative oscillator losing momentum. We do have a green up candle that is forming, just the first day of a 5-day candle, but is sitting right there on the prior trend line. We'll just continue to watch, see what there is to see. We go to the 2-day chart. What do we see there? Price percent oscillator still heading down, even though there's a green up candle. We look at the high there, 205.59. We do see that the prior candles actually had higher highs. So again, we'll wait and see how that plays out. Of course, price percent oscillator, our main indicator, still heading down. Derivative oscillator gaining downward momentum. Go to that 4-hour chart, and of course, it's flat. Up some in the morning, and then a red spinning top in the afternoon. Down for the day, 0.45% is what the NASDAQ 100 was. So again, 2 days in a confirmed down move, weekly's in a confirmed up move. We just got to see how this shakes out. Don't have a trade on the Qs or the S&P 500 at this point. Let's go to 20-year bonds. Where are they? Well, the weekly chart is still in a confirmed down move. Price percent oscillator still moving down. Derivative oscillator losing downward momentum. The prior week was a red spinning top. Solid red, meaning indecision, tending down so far. Have a red down candle, no wick on top, a little wick on the bottom. Again, it's just the first day of the latest 5-day candle. You never call a candle until it's completed forming. And a weekly candle doesn't complete forming until Friday at the close. So that's what we see so far this week. Market's still down in bonds. Go to the 2-day chart. Look at what we see occurring here. We have the price percent oscillator heading down, hasn't crossed over. Derivative oscillator still positive. But my friends, if we get a crossover going down, then you may look for a practice trade when the candle closes. And if we have a close, now again, this candle's already closed, so the Tuesday, Wednesday candle, on Wednesday around 3:55, check it out. If it's crossing over going down, then you might have a jumping in point around 3:55. Look at it, think about it, consider a practice trade if it shapes up that way. Again, all the charts all the time, looking at everything, making an educated decision in what you do based upon what the indicators are telling you. Might be something for you to practice trade. Now, let's go to the 4-hour chart. We see, even with this sideways upward slide, up in the morning, a little bit of a pullback in the afternoon, the price percent oscillator still heading down. So again, we see that the derivative oscillator losing downward momentum. So we'll wait, see how things shake out, what we learn as time continues on. Do watch for a potential jumping in point in a down move on TLT if we have that crossover going down on the 2-day candle, on the 2-day price percent oscillator rather, on Wednesday. We'll see if that makes itself available for a practice trade. Last, we go to gold. Gold's always the last thing we look at. I love gold. What do we see gold doing? Down for the day, 0.03%. Start the week off, the candle forming, red down candle. Of course, all these are subject to change. You got 4 more days of movement. Price percent oscillator continuing to move down. Derivative oscillator losing some downward momentum. That prior week was a green spinning top. So again, indecision pretty much. And we're seeing it play out with, so far, with some down movement. We look at what's happening here on the 2-day chart, and this is rather interesting. It is, again, the derivative oscillator still gaining upward momentum with those 4 prior days of up movement. Now we have down movement. And what do you see happening when things closed? We see that the price percent, we would love to see a lot more of a pull away, but we can see blue under red, meaning that, of course, things are switching back over after a popover going up. Looks like the overall downward trend is trying to reassert itself. Just barely down for the day, 0.03%, but it is pushing through, pulling away. Now, did you to get into this potential practice trade, and we talked about this over the course of this prior week, did you have to get in this afternoon at 355? Well, how risky do you think that would be? Well, down 0.03%, 0.3%. Derivative oscillator still gaining upward momentum. Price percent oscillator trying to pull away from the red signal line. Price still above the weekly. It is a difficult call to make just looking at that 2-day chart. We go to the 4-hour chart. What do we see? We see it did cross over going down in the morning. We had more down movement in the afternoon. Derivative, and we can actually see, well, actually, it looks like it crossed over going down actually on Friday afternoon. And then just accelerated some of the down movement during the day. The problem is it hasn't hit a lower low. The low, 137.45. The prior low on Friday morning, 137.40. So pretty close to that. And again, do we have a floor there? Don't know about that. Some of you may have jumped into that practice trade as you saw things were closing out on that candle representing Friday and Monday. If you did, follow that. Let's see how that works. If you did not and you're waiting for more confirmation, that's not a problem either. Let's see how that goes. We'll continue to follow that on gold. And again, the only way to actually play gold, since DGZ has such a large spread between the bid and the ask, not a very good thing to practice trade because you have to make up so much lost ground just entering. But those of you who've taken the 3-part option series, hopefully if you did jump into a put, you're practice trading that. You printed out your options montage, and you're going to follow that through. If you did not, then of course, let's wait and see how this progresses. And if you have a strong pull away, it is very weak at this point, and I don't blame you if you did not jump into that, things being as they are in the market at this time. But we'll wait and see how that plays out. Folks, that's where we are as we end the day on Monday, go into Tuesday in this Christmas season. Hope that you are doing well. Again, that special training that we have for you on how to use freestockcharts.com and TC2000 to help you actually record the progress of your practice trades is available in the show notes for all the subscribers for free at chartingwealth.com. If you're not a subscriber, go there. Otherwise, you're not going to get the free daily training. Sign up. We never spam that list. You'll get an email once a day when the market is open from us, and it will have not only a video recording of our market reviews, it will also have for you the special trainings we put out on a daily basis, plus the links to the trade worksheets, the daily market worksheets, the weekly market worksheets, the discount if you want to subscribe to TC2000, which is the charting platform that we use. It's the paid version of freestockcharts.com, and all the other goodies we have there for you. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. By the book, link in the show notes, Charting Your Way to Wealth.